In the aftermath of the housing crash of 2009, many houses were bought at a discount price by buy-to-let landlords. And over the next few years, the share of buy-to-let rose to a record level. But 2016 was a turning point, with government legislation imposing high tax rates on landlords in an effort to reverse declining home ownership rates. Since then, there's been more tax and regulation changes, which combined with higher interest rates mean there's no shortage of landlords who say they are planning to leave the sector. Just 9% of landlords plan to buy more houses, whereas 39% plan to sell. This is despite record rent increases, which are causing households to spend a higher share of income on rent. Will the rental crisis get even worse if more landlords sell? Well, in June 2024, 18% of properties listed for sale had been for rent in the past 3 years, and this was a 100% increase on the previous year. So there is some evidence that buy-to-let investors are starting to sell. Now, the top reasons for selling include past legislation, higher taxes, proposed legislation, and also rising interest rates. I think another reason includes the fact that in the past few decades we've seen rapid growth in house prices, and that's probably coming to an end. So why are landlords selling up? Well, in the past, landlords could deduct mortgage interest payments from their taxable income. This has now been removed and is a significant increase in costs, especially for higher income tax landlords. One solution to this is incorporation, but this typically requires a much bigger housing portfolio, and in fact what we're seeing is a shift from small-scale landlords to bigger companies with more properties. But it's not just tax. Landlords also complain about Section 21 ending no-fault eviction. They claim it makes it harder to get rid of troublesome tenants. On the other hand, renters say it's necessary to help protect their rights and avoid unfair eviction. Landlords are also concerned about new regulation, especially with regard to improving energy insulation. The new government have confirmed that by 2030, all houses in the rented sector must get a minimum of Grade C. And this can be a big deal for the UK's ageing housing stock. We still have many houses going back to the Victorian age. In fact, the UK is one of the worst insulated housing. It means we waste a lot of money on heating bills, and there is logic to the government's desire to have better insulated homes, but landlords claim that all falls on them, then they may prefer just to sell rather than invest in improving insulation. Landlords also complain there's something of a war of attrition, with additional legislation such as easier to keep pets, the removal of wear and tear allowance, deposit protection schemes and things like that. Perhaps it doesn't also help that landlords' reputation is fairly low in the popular imagination. But it is more than just legislation and tax, because landlords who bought at the end of the 2009 crash was pretty well timed, because over the next 13 years, house prices would rise by around 85%. And at a time of poor investment returns elsewhere, buying property in the UK seemed a one-way bet. But 2024, we've now seen 5 decades of rising real house prices in the UK. And it's left the market almost at breaking point, because with house prices near 8 times income, it's hard to see much further substantial growth in prices. Even if prices are propped up by wealthy parents helping with deposits, it's hard to see a really significant increase in real house prices. So this motivation for buy-to-let and renting is much less strong than it was in the past. So that means that if you're not going to see capital gains, then you're relying on rental income. Now, on the one hand, rents have been rising faster than inflation and wages in recent years. But on the other hand, a buy-to-let investor who's taking out an interest-only mortgage will have seen their costs rise significantly. If we go back to just 2020, when interest rates were around 2%, an interest-only mortgage of $200,000 cost only £334 a month. By 2024, with interest rates closer to 5%, the same interest-only mortgage would have increased by 149% to £834 a month. It's a big shock. So the basic buy-to-let mortgage is now above the rental yield on housing, which has improved a little bit, but not that much. Now, in the short term, some landlords are still on fixed rate deals, but when they remortgage to higher rates, they may take that as the time to sell up and avoid paying the higher mortgage payments. Now, for all the talk of landlords selling up, what is actually happening? I remember covering this a couple of years ago, and despite all the talk of landlords selling, the mass exodus is often exaggerated. Now, this comes from the industry itself, which understandably uses the threat of leaving the market as almost a bargaining chip to try to avoid regulation and tax rises. Secondly, if we look at the number of people in the private rented sector, the number has been relatively stable in recent years. Now, there has been a fall in new buy-to-let mortgages, but there's been no massive exodus that sometimes it's made out to be. Now, what has happened, though, is that demand has risen much faster than the supply of private rented accommodation. So in this context, a stagnation of supply in the private rented sector is a problem, because with the rise in the population we've seen, we need to be increasing the private rented accommodation, not keeping it the same. To illustrate this, Zoopla report that the number of available rented properties on the market is still 25% below pre-pandemic levels. And this is perhaps because existing renters are staying put to keep their existing deal. So it means that with the growth in new renters, they're facing fewer and fewer properties coming onto the market. And this is why we hear crazy stories of 50 plus inquiries per property and bidding wars to be able to get any property at all. Also, although statistics are hard to find in the rental sector, there is reasonable evidence to suggest that large commercial property companies, the pension funds and ISAs, are buying up property wholesale. So when the private landlord sells, it's been bought by a bigger company. Also, foreign companies are increasing their portfolio. They're not so worried about the changes in UK tax. But does it really matter if private landlords sell? Because one reasonable point is that the house doesn't disappear. It just shifts from the private rented sector to the owner-occupied sector. So if a landlord sells, it may enable the private tenant to be able to buy that house. And so all that has happened is a change in ownership, which after all was the aim of government policy for quite a few years. Well, this is true to some extent. Houses don't disappear, but there are still a few points worth making. Firstly, housing density does tend to be a bit higher in the private rented sector. A privately rented home may support 4 or 5 adults, whereas an owner-occupied may support just 1 or 2. Secondly, selling rented properties is good for those tenants who are the margin of being able to buy. People who have a high income or perhaps support from their parents. If more properties come onto the market, they may be able to buy. But there's a whole group of private tenants who are nowhere close to that buying line. So even if landlords sell, they kind of have no chance of buying anyway. And this is a problem that the decline in the availability of private rented accommodation has really hit low-income households quite severely. Data suggests that 4 in 10 households who seek temporary accommodation from their local council, the main reason is because their landlord has sold their private property, and perhaps they're not able to afford the new market rents, which are often higher than their existing deal. Now, the UK has had a big problem with rising homelessness, defined as insecure accommodation, and the paucity of supply in the rented sector is a big factor behind this. Now, if we go all the way back to 1920, 80% of households were in the private rented sector. Now, this ratio steadily fell for the next 60 years as owner-occupying rates increased, as did social housing. And in the 1970s, this decline in the private rented sector was particularly sharp. The government were regulating quite strictly. There were rent controls, a lot of legislation in favour of tenants. So landlords sold up. But these houses were often bought by local councils who converted them to social housing use. So it created a housing market much more affordable for low-income households. And the big question is, could this be replicated? Now, unfortunately, prices are much higher now, and in real terms, many councils are close to bankruptcy. They really don't have the kind of funds available to be able to buy houses coming onto the private sector. It's a shame, because it would be a great solution to be able to increase their social housing stock much quicker than just building them. So a big question that's left is there any hope that prices and rents will fall in the coming years? This video looks at prospects for house prices and rents in both the short term and the long term. It's not particularly optimistic, but check it out anyway, because you'll learn a lot. Cheers.